Welcome to Non-Consensus Investing. I'm Ram Alawalia, your host and CIO at Lumida Wealth, where we specialize in the craft of alternative investments. At Lumida, we help guide clients through the intricacies of managing wealth so they don't have to shoulder the burden alone. Through this podcast, we draw back the curtain to reveal the strategies employed by the best in the business for their clients so that you too can invest beyond the ordinary.
How's everyone doing? What a Sunday, right? I thought I'd share some thoughts with everyone here. I know you're all trying to make sense of what's happening. And the title of this is called This Isn't Right. I'll come back to that in a moment. But right now, at this very moment, markets are confronted with this paradox. The paradox is that everything is oversold. There is panic. It's measurable on many indices. Okay. At the same time, valuations are overpriced relative to earnings in a global trade war, of which we're still in the early innings of unfolding. Okay. That's the paradox. That's the mismatch. And that's the reality that is confronting people and markets today. Okay. This will be looked back in history as the biggest self-own since like Andrew Mellon. And this is like Herbert Hoover kind of stuff, guys. Okay, let me frame this up for you. Okay, what makes stock prices go up is earnings growth. Earnings come from profit margins, and you get profit margins by selling at a higher price and producing at a lower cost. And the policy mix we're seeing right now around this global trade war is costs go up and CapEx declines and consumer spending, which has already been soft, is going to pull in a turtle shell. So look, I think the main message is like, this just isn't right. It's not good policy. It's just not right. You've got 500,000 people in Vietnam that are working for Nike. Nike made decisions based on what their expectations, their climate was around hiring practices, investment decisions. They thought they were doing right by their shareholders. And now they're told to remove their entire supply chain with 2 months notice to the United States. That's not right. I'm not even a Nike shareholder, by the way. Okay, like my team this weekend, we have two strategies we're looking at right now. One is, what are the names we're going to aggressively short at the open? And other names that we're going to aggressively buy depending on what Trump is thinking at this moment, what he says. That's not right. That makes no sense. Does that make any sense? So right now, many countries are mispriced from a valuation basis relative to their earnings. And it is very easy to find opportunities. So look, I think this goes back to very basic standards, right? You have a thumb. It's an opposable thumb. Apparently, it's one of the things that set us apart from other mammals. You can either trade and shake someone's hand with your thumb, or you can wield an axe and hurt them. It's like Cain and Abel stuff, right? It's like biblical stuff, right? So right now, we're going in a direction that is bad for earnings, bad for markets, bad for a lot of stuff. Okay, and I'm giving you the recognition moment that you're thinking about, but you haven't uttered to yourself yet. Maybe you have, right? But it's not right. Isn't that the main message? It's not. So what's happening is CEOs are frozen because they can't make. If you imagine you're Nike, what do you do if you're in Nike's position right now? There's no advanced rope. There's no Anduril to go stitch Nike shoes in the United States. That takes years and years to build. It's a pipe dream. That's another startup that has to get funded with the capital markets, which have shut down right now. That makes no sense. That isn't right. So these tariffs nominally are meant to generate $600 billion in revenue. And in the last 2 days, you've lost $8 trillion in equity valuation. Forget about the last month. That's not right. Doesn't make any sense. Makes no sense. It's not right. So The underwrite to this market is literally what Trump is thinking and what decisions he will make. There's no climate that if you're a CEO or you're a small business that you can invest against, right? So the planning horizons are narrowing and shrinking. So what's happening is people are becoming less and less strategic and making less long-range plans around where they invest in the next plant and funding that initiative. And they're getting very shorter term. I'm sure you see it in your investing behavior. I'm sure with your own planning, people are waiting for clarity. Here's an example: Traeger grill. Okay, you guys have a Traeger. I love to grill. I'm really looking forward to summertime barbecue. I really enjoy that. Okay, I don't have a Traeger grill. I think about it. That stock is down 70%. Right? I'm not saying buy it. I wouldn't own it. I never owned it. I'm just giving you, for instance, it's an example of hundreds of thousands of businesses out there. They have production from somewhere offshore to deliver a good product at a standard of quality to an American to enjoy time with their family. They don't have the free cash flow or cash war chest of Apple or Google. They can't pivot like that. These are contracts that are negotiated over long periods of time, and they're told in 2 months, not even 2 months actually, they're told the tariffs are effective immediately actually. And that hits their gross margin. In fact, the tariffs are greater than their gross margin. That's not right. That's not right. It's not right. I think a lot of this is going to, again, unfold on how someone thinks, which is Trump. And the question is, how do you read what Trump says? So I think he legitimately believes tariffs are good. And they're not. They're really not. They're terrible. This is established, very basic economic reasoning. I've written about this on Twitter, like I think every week now. I'm trying to explain it 10 ways to Sunday. You make peace with your neighbors and you trade with your neighbors, right? I plow and harvest, you fish. Then we trade with one another. We have boundaries called borders. We respect one another. And we're both better off from that. I can't fish and plow at the same time because I need specialization. Where are the fish? What are the right seeds to plant? Where's the climate? Because attention needs to be focused to deliver excellence. And what global markets are is an exercise in deepening specialization and know-how and craftsmanship and trade and teaching and skills and relationships as well. So you can't play 52 deck card pickup. That's what this is right now. Think about this. Like the World Trade Organization, you have these rounds. They had a round called like the Doha round, right? They plan up to it for years, and there's negotiations around these things. Like in one day, that's gone. That's gone. That's not right. It doesn't mean there aren't issues to be addressed. Yes, Europe's got to pay more for the defense. So does Canada. Okay, sure, there are issues out there, but this isn't how you approach it. And you also don't blame globalists. These are, that makes no sense. There's no globalists. There's no globalists here anywhere, people. Where's the globe? Can you give them a name? It's not George Soros, guys, okay? Yeah, these are Econ 101 lessons. It's just not right. It's like Steve Moran's theory was, hey, we put deficits up. We have tariffs up, then the US dollar will increase. The US dollar is dropping because confidence in American assets is declining. So the theory is flawed. You're supposed to walk away from your theory. That's called science. You don't double down and lean into it. That's not right. It's not right. Yeah, keep the questions coming here. Yeah, look, my read of the situation, since essentially what you have to do is read someone's mind, is that they truly believe that deficits are bad, that trade with your fellow neighbor is bad. And they're going to stick to that, right? It's never admit defeat. That is not the psychology. Now, Trump is a complex person. He's had a lot of things thrown at him, a lot that was unfair, and a lot that was fair too. Let's just call it spade, guys, okay? That's just the reality of it. And I think what you're seeing play out in public markets is it's his airing out these grievances and issues. It's a very personal thing. believes in trade. I mean, he's been talking since the 80s about Japanese real estate investors, and it's a deep-seated belief. I don't think he can let go. And I think Lutnick, what he's saying makes no sense. Doesn't make any sense to you? So you've got Nike's got plants, 100 plants, okay, in Vietnam, 500,000 people employed. And he's saying that we're going to bring them back into robotics. So where's the win? Where's the win? Not an American worker. Certainly not an American worker who's going to earn a wage of $3 an hour. Not the American consumer who's going to have to pay higher prices. Not the Nike shareholder. But where's the win? There's no win. There's no win. What happens is costs go up. Inflation boosts prices, and that hurts real incomes, right? We gain from trade with our fellow neighbors. This is basic stuff, guys. This is Adam Smith, David Ricardo. We established this is one of the victories of the Enlightenment tradition, which birthed the United States of America. It's very basic things that are getting wrong. Yes, spending was too much. Yes, you've got to deregulate. Yes, there's fraud, waste, and abuse. Yes, I don't know what the hell US8 is doing. Okay. Yes, all of that. Okay. But like 52 card pickup on trade, that's not right. You can't do that. It's not country versus country. It's actually small businesses and individuals making those choices that leads to the trade deficit. Okay. So there's a manager at Nike who said, gee, I'm trying to deliver a great product for my customer at a certain level of quality. How do I do that at an appropriate cost with the standards to meet that? And they go find and source that. That's called the invisible hand at work. Like the Nike story is playing out across tens and tens of thousands, hundreds of thousands of individuals. Anyone on Shopify destroyed. I don't know what Shopify is. I'm just giving an example. If you're on Shopify or you're a merchant and you source product internationally, you sell it, you're gone, you're destroyed, right? So I can tell you my professional instincts as a money manager right now is to short many developed markets where their valuations are mispriced relative to earnings growth and inflation now, given this policy cocktail that we're seeing. That's my professional instinct. I'm telling you, that's my instinct. That's what. Okay, that's not right. Is that right? No, it's not. I don't want to short Canada and France or wake up every morning saying, okay, which business is about to get imploded here? Which businesses are exposed to trade wars and inflation risk? And that's the process that's happening. It's unfolding right now, where if it's easier to make money doing that, then people will do more of that. And so the psychology right now is broken. It's warped. This is bear market psychology now. This is all bear market psychology, guys. I mentioned this Wednesday. I think within 30 minutes of that announcement, I said the probability that we're in a bear market has increased substantially. 100% probability, guys. 100% probability. Newsflash. Okay. So all the safe haven trades have broken down. There's no safe haven. What's a safe haven? You think crypto is a safe haven? Nope. Okay. So what's happening right now is markets are pricing this all in real time. It's reflexive. It's reflexive. They're trying to figure out what to do. They're trying to make meaning of things. Is Trump serious? Is he not serious? Is it a negotiation? Is it not? And all of that just creates a risk premium because even the presence of uncertainty, people just pull back because they're not sure, right? Like a turtle, they go back in the turtle shell and they wait. And this is creating essentially post-traumatic stress disorder. That's the way I think about it. And that psychology has flipped from bull to bear market, unfortunately. I'm sorry to break the news to you guys. I'm sorry to break the news. Don't want to share that to you. It will go down as one of the biggest self-owns in American history, unless he flips a script and he says, nope, hey, just kidding, 10% universal tariffs, which would still be bad, but much better than this. It's a sales tax, by the way. It's a sales tax on Americans, right? I interviewed Scott Lewinen, hedge fund manager. from Texas. I imagine he's a conservative guy. I don't know how he voted, but okay. And he's a hockey blade manufacturer. They produce at $30. They source from Vietnam. They sell $70, and they have fixed price contracts, right? When you manufacture a hockey stick, you make a contract with, say, Walmart, and you say, I'm going to sell it to you at $70. Okay. Their margin's gone. They're gone. Okay. And the margin doesn't necessarily cover your fixed costs since you produce enough volume. You can't fix it through volume. Okay. That doesn't work. So they were paying taxes. They were employing people, Americans and people offshore, like probably most businesses today, that you figure out the right way to manage a business. You think through it. Can get an offshore virtual assistant in the Philippines, right? Can you get a developer in Ukraine, perhaps, or India, if you're a startup, to save cost, to pursue your vision and deliver for your show, right? So that's not right. Those businesses are gone. They're gone. And they don't know if they're gone yet, actually. They don't know if they're gone yet. They are hoping for a miracle. Think about that. Is that right? No, that's not right either. That's not right. So there are cattle ranchers that voted, and they're very conservative people, and they're also concerned about their businesses, and they can't make plans. They can't forecast in the future. That's not right. The whole project of human enterprise is making long-term forecasts. That's what it is. They don't have reliability around the party you contract with to make a commitment that goes from 1 year, 3, 5, 10, 15, 20 years. That's what a plant is. Like, we build a plant. Taiwan Semiconductor is building a plant. They're making a long-term bet on the rules of the road, the ability to attract talent from local universities, contracting, prices. This was the lesson of Friedrich Hayek in Road to Serfdom. It was the idea that there's this tacit knowledge, there's know-how, and it's a fatal conceit to try to fix things from top down, from a centralized power that knows better than other people how to make their own individual decisions, which is also another kind of paradox here. This is the kind of stuff that AOC, like hard left people, unions they love this stuff. Makes no sense. That's not right. This is not right. You need to be able to plan, make forecasts, have credible commitments. That's what civil society is. Get government out of the way, create rules of the road, enforce standards, hold people accountable. If they're bad actors, hold them accountable. You don't pardon the guy that did securities fraud, trying to build with a competitor to Tesla, the driverless. You don't do that. That's not right. So yeah, this is look, I think we capitulate within a day or two, but hang on one second here. This is live, by the way. I'm getting a call from my wife. Give me one quick second here. All right, we're back. The appropriate path to take in the next few days depends on what someone says, and you should have your game plans ready now. Let me ask you this, is that a productive use of your time? No, it's not. You expect a stable climate where businesses can invest, grow, trade, and prosper, and earnings goes up and stock prices follow. That's it. But you are now in the position of having to think about these things because you can't make long-range planning forecasts. Things have to come in. And so you go from investing for the future like a farmer does, and you plant a crop and you harvest, to being a mercenary, to what a trader does. It's better to be a trader than an investor in this market. Okay? That's not right. It's not right. People need a climate where they can invest and plan for the future and have reliable expectations. That's it. Very simple stuff, guys. Let's see. Maybe a negotiation. These guys are making it up, guys. Come on. It's a negotiation tactic. Come on, guys. You're not seeing reality for what it is. it's best to be portrayed to the other side that you look crazy by hurting American small business and hurting. Where's the win? Where's the win? Where's the win here, people? There's no win. It's a negotiation. It's called stupid negotiation tactic. Am I right? Come on. It's not they are figuring out in real time. They believe these things. They're getting confronted with reality. Reality is saying, hey, prices are lower. Challenger survey says you're about to get announced layoffs are spiking. So future layoffs will go up. And the 10-year hasn't really moved that much. The 10-year was far lower in September of last year when you had a soft growth scare. Now you got a real growth scare. Think about that, right? Nasdaq's in bear market. S&P is probably touch that tomorrow morning. So they're saying, gee, we have this theory and the theory isn't working. And so now they will spin a narrative. And one approach might be they might want to own the narrative, which is there's something that I think Trump retweeted where it's like part of a grandmaster plan. And they went, no, it's not, guys. It's not. There's no grandmaster plan here. Essen was interviewed the day the tariffs were dropped on Wednesday. And very basic questions were asked around why, say, countries like Canada and Mexico were included or not. And did they account for these considerations? He had no clue. All right, I think he's being sidelined. That's not a Besson policy, guys. It's not a Besson policy. Besson's the adult in the room, isn't he? Besson's like the fig leaf. He's the fig leaf. Stephanie Rule is a reporter. I don't know if this is real. I'm just sharing we're all processing information in real time, right? So she's an MSNBC reporter. Take that for what you will. But she said that Besson is thinking about leaving the administration because he doesn't want to be associated with that kind of policy in American history. I can't blame him. I don't know if that report is true or not. I'm just telling you that's out there. So yeah, that's not right. That's not right. Yeah, free trade is a basic bedrock of capitalism, and it's what's led to American growth. Like the depression stuff, Smoot-Hawley tariffs, all stuff you learn in schools. They're basic things. It's not like a deep state theory, guys. There's no conspiracy. Free trade works. Free trade works. You specialize. You cooperate with your neighbor. You have a fence. You have a contract. That contract is administered by a third party. It's called a court. You have a judge. Right? And they look at facts. They apply the law. They make conclusions. Then you have banks. They make sure your savings are secure. That's how life works, right? But this is imagine you're Costco now. I'm short Costco now, by the way. 50. I don't want to be short Costco. It's 50 times earnings. 50 times earnings. You've got increased likelihood of further softness in the consumer. Okay, and they sell goods. They're not services. They sell goods. It's more cyclical. And the vast majority of the goods they sell are imported. Does it make any sense? No, it doesn't. But it's not right for Costco to be in that situation, nor their shareholders, nor their employees. It's not right that I have to think about even shorting them. That's wrong. And so if you're a bank, right now you're concerned about credit losses because you're seeing high yield markets widen. And what you're going to see next month is the Fed Home Loan Officer Survey show tightening. Because there's a lot of reflexivity to all of this. There's a lot of reflexivity. You're right now listening to me to figure out what you should do. Everyone's looking at each other, right? But if that policy maintains this global trade war, higher tariffs than we've seen since Smoot-Hawley, they will hurt earnings. They will hurt profit margins. You know, the U.S. stock market, just put it in perspective for you. We just had a 15-year of the most exceptional stock market returns. And those background conditions were fiscal dominance, low interest rates, quantitative easing, stimmy checks to infinity. Okay. And those shouldn't have been done. Okay, fine. But now you're on the other side of that. You're on the other side of that. Well, that's a strategic view, right? You're in a bear market. Okay. Now, this is like I think going back to ancient wisdom is really helpful to stay anchored, right? You have the 7 years that are profitable, the 7 years that are not. Classic story from the Bible, right? Am I right? Like that's happened. It was 15 years up, and then we'll see what happens here. Markets are built on psychology and expectations, and those are fragile. And they're this level of a gut punch to the basic contracts and expectations that sovereigns have and corporates and small businesses have and consumers. It's significant at a 20 times earnings. Okay? Right. Think about it this way, like your Wile E. Coyote, the multiples are based on future expectations. You make plans for the future, you're optimistic. And right now you look in here and say, gee, what the hell is going on here? Right? Because your basic foundation, the assumptions you're making are appended. Right? So you're not priced for that. That's what's happening now. Okay? So people are recalibrating and repricing and re-rating in real time. That's not right. People shouldn't be doing that. They do not. It's not a productive use of their time. Do you want to spend your time with me right now? Wouldn't you rather be outside, hanging out with your family, having a barbecue? But you have to, because you have to focus, because it creates an impact to you, right? So that's the situation things are in. That's the situation. I can tell you, professional money managers right now have too much long exposure. Over the last 7 weeks, they've been selling while retail investors have been buying the dip. Okay. And I expect that you will get a capitulation Monday, maybe Tuesday, but we're within 24 to 48 hours. And there's no magic chart or more magical line. There's nothing like that, guys. It's dynamic. It's reflexive. Literally matters what is said, how things play out, how things open. All of that matters. All of that matters. So I can't say, I tell you there's a level of 5,100 in the S&P and 4900. I can tell you those two levels. Sure. Okay. There you go. There's something. I don't know if there's much you can do with that information, though. What you have to do is listen to what Trump says. Okay? If you had a Drudge Report for Trump, it'd be tens of millions of viewers right now. What is Trump saying right now? That is the single most important driver right now. Because when you have a correction, what ends the correction is the primary driver of it stops being the issue. And here it's tariffs. That's the issue. So it needs to go away. And that's what you focus on to learn whether it's going to go where. That's what you do. Okay. Now, some interesting questions around what do you buy here? Look, there is this growth to value rotation underway. That's accelerated. Value has been in growth the last 1 week, 1 month, 3 months. Okay. But it doesn't matter in the sense that value will also re-rate lower as growth re-rates lower. Value re-rate lower at a slower rate than growth, if that makes any sense, right? So you're going to have multiple compression. It'll hit growth stocks first and at a faster rate because they're higher beta. That's what's going to happen. That's happening now, has already been happening. And it's going to continue to happen. Okay? So it's the multiple is about expectations and hope for the future and clarity and certainty, ability to project and make long-range forecasts and long-term commitments and contracts with your neighbors, with people you work with. That's unfortunately, that means the multiple has to come down. Okay? That's what has to happen under this climate. Yeah, are there bargains emerging? Sure, but it doesn't matter. You're missing the point. The tide itself is going out. Like, you want to pick up find the crab on the beach? But that's the issue. That's the issue. That's the issue. So I started this by saying you're confronted right now with this paradox. The paradox is that markets are extremely oversold. The VIX is elevated. Put call ratios are through the roof. I can tell you that means it's an excellent time to buy on the one hand, from a trader perspective. On the other hand, I can tell you that stocks are overvalued relative to their expected earnings. Because what's going to happen is analysts are going to come out and they're going to say margins are down. any retailer. The markets are discounting this, but they're going to have to come out yet again because the analysts, they listened to Trump speak last Wednesday. Now they're trying to process it right now. I have no doubt they're analyzing this right now, trying to make sense of reality. And they're looking around and saying, okay, did we just hear what we think we just heard? And they have to build a new model. And that means more negative analyst revisions. That's what's going to happen. So on the one hand, you do have this coiled spring. Okay. And if you're very tactical and nimble, you can benefit from that. But most of you are not, unfortunately. Okay. That's not right too. It's not right that you're in that position. It's not. Right? It's not right. Now, on the other hand, I think you get a rally, but then it's probably sold. Okay, because valuations are too high relative to the glide path for earnings and profit margins. What makes stock prices go up is earnings. Really simple, guys. Really simple. Right? Why does a drop in interest rates make stock prices go higher? Because interest costs get lower. Why does inflation hurt stock prices? Because it hurts real earnings. Really simple. Focus on earnings growth. Earnings. Okay? So when earnings growth goes south, then layoffs happen. Now, again, there's a time to intervene now because companies are going to hold on to labor because it's costly to let go of people. It's costly to do those things and rehire if it's a head fake. Okay? So there's a time to intervene. There's path dependency. Okay? And so that's what you need to do is you need to stop the tariff nonsense. And then I think you're probably still in a bear market, by the way, unfortunately, because psychology is broken. It's just broken. Okay. But you'll get some bounces and get some opportunities in there to reposition. Okay. Like in the dot-com era, when markets corrected after March and early April, they had a rally in the summer and the smart money rotated out. Something like that could happen here. Okay. Over the last few weekends, my team and I have been researching like Q408, 2008, all this stuff, just playbooks and contingency plans, as opposed to saying, what's the best business to own for the future? And we do that too, of course. But the tide is bigger than the name, if that makes sense, right? The strategic view is the tide is going out because markets are built on confidence and trust in one another and reliability and clear expectations, right? How do you make a forecast of your earnings when you don't know whether you can reliably contract with a small business in Vietnam? How do you do that? What is Apple's CapEx expectation right now? What are they supposed to do? Like, how are they with the supply chain? Under what time frame? Do they really have 2 months? Do they have to jack up price in the near term? But that's the thought process of every CEO, small business person right now that they're going through, and that's not right. It's not a political party thing, guys. It's not a political party thing. I'm just telling you how I see reality, which is probably why you're tuning in. I'm telling you, you privately hold that perception, but haven't let it hit something you can articulate, maybe, because processing information is complicated, right? And there's so many different inputs, and it's a social process. Sorry, one second. Be right back. So I'm back. Look, so we're all here spending time on Twitter and spending time with our families. That's not right. I'm glad that you're spending time with me. I'm glad to spend time with you too. But this is what's happening now is like a kind of like a therapy moment. People are processing, updating their views of what reality is based on what we saw last Wednesday. Okay, where Howard Lutnick said, we're going to replace 500,000 people in Vietnam with robots that don't exist in the United States. No win for an American worker, no win for an American consumer, and no win for the person in Vietnam either. That's not right. They're also human beings. What's wrong with that? You're creating a bid for labor. And if they can voluntarily contract, then their standard of living can improve. Capitalism and trade has been the biggest anti-poverty program. It wasn't a government program. It was free enterprise and capitalism. Remember the $100 laptop thing? There was like a project to say, let's go make $100 laptops for everyone. No child left behind, $100 laptop. That's done. Capitalism solved that problem, guys. Amazing. Invisible hand. Competition. The desire to deliver a product with quality to a customer at a competitive price through hundreds of millions of small decisions. How do you do that when you upend the global trade order? You can't. And it's not just the trade order, it's the financing order as well. All right? Because during this rise of trade and globalization, the United States was selling bonds to China. We bought cheap stuff from China, cheap furniture, stuff we couldn't produce here at that cost, right? And China, we don't have stuff to export to them. We're not going to sell them F-35 jets. We're not going to sell them NVIDIA chips. Put export controls on those, right? We'll sell them like the last year's version, let's say. So the only thing they could do with the money that we handed them US dollars, the only thing they could do is buy bonds. They bought our bonds. They financed American growth. And we sold those bonds to China at 1.5% interest rate. Think about that. Inflation is higher than 1.5%. Okay? We stuffed them with losses. They're the ones that woke up one day and said, gee, we're on the wrong side of this trade. But they're an export-driven economy. That means on the wrong side of the commodity bullwhip, right? If you know the commodity bullwhip, it's the idea that if you're a commodity producer or cyclical, then your earnings are extraordinarily volatile based on end consumer demand, right? The consumer touches the starting point of the value chain and it flows out from there. So if you're an export-led economy, your volatility is like this, okay? That's why people aren't generally excited about commodity producing stocks and why you like healthcare businesses, they have stable revenue, or why people like software because they have stable revenue, stable earnings, because you make predictions that are long-term. You can make commitments and forecasts and plan around, right? So leading up to last Wednesday, the world was financing American growth. Here's another thing. There was an announcement over the weekend that $8 trillion in US investment. And guess what? The trade deficit matches the capital account surplus. It's an accounting identity. When we buy furniture from, let's say, China, by the way, I'm all for tariffs in China, actually. They're a bad actor, cybersecurity issues, hacking, espionage, they're a bad actor. They're not playing by the rules. So move it to Vietnam, I'm all for that. And the fentanyls in China are legitimate. They're totally legitimate, and Trump is right to go after them on that, okay? But that's kind of where it begins and ends. That's where it begins and ends, okay? So discipline, like you have a kid, to misbehave, you discipline them. Carrots and sticks, okay? We have neighbors. Canada's a neighbor, Mexico's a neighbor. Everyone's better off when everyone gets wealthier at the same time because trading opportunities improve. Trading opportunities mean specialization, right? Specialization, gains from trade. Like a doctor could schedule all of his calls for his surgery work, let's say, and he would do better than the secretary because he'll know the patient history and all the rest. But that's not the best use of his time. You need to have a trader, and that trader is with someone who's the secretary, let's say, admin, and that creates greater total output for everyone because the secretary can specialize on logistics, on calendar planning, knowing the ins and outs of the schedule and when the OR teams are ready to go and capacity in the holiday schedule. You don't want the doctor thinking about any of that. This is a simple example though, right? You make contracts based on reliable expectations, and all that's being upended right now, and that's not right. It's not right. Yeah, Thomas Sowell came out. So Tom Sowell is a conservative guy at the Hoover Institute, by the way. He's at Stanford, but he's in the kind of disciplined Milton Friedman, by the way. Smart guy. Yeah, like I saw this thing too. I don't know if you got to read the room here, guys, right? You think Thomas Sowell was reading Trump's, you think he's really studying what Trump's going to do next? I don't think so. He's giving you, that's a great advice he's saying. He's like, look, not even advice, he's just saying, yeah, it's a negotiation tactic, assets go up. And if they're beneficial, then assets go down. This is called FAFO, guys. They're experimenting and finding out. It's FAFO. Reflexivity has its own way of creating its own outcomes. Thanks, man. I appreciate that. I appreciate it. I figured people probably want to get some perspective. Just sharing my own perspective. Wow. A lot of comments, a lot of reactions here. Look, if you're in the tribe, you have to toe the party line up until you're not in the tribe. That's how it works. You cannot express dissent when you're in the tribe. So we on the outside, we have to interpret tea leaves. We have to look at small cues and signals and behaviors. The guy was asked very basic questions last Wednesday night. He did not have answers to. That's not a best plan. That's a GPT-4 trade plan. Create an AI. And there's tariffs imposed on a country populated by penguins. That doesn't make any sense. And that's not right. It's not thoughtful. It's not targeted. It's not niche. It's not calibrated. Okay. This is a good question. It's a good question. So one is you have different paths the world can unfold. So anyone pulling up like a chart and a pencil and a crayon, none of that stuff really works, guys. It's just what is the policy and what will be said next. The planning horizons come in. Okay. That's it. Show me TrumpWatch.com. Okay. Get me a pass to Mar-a-Lago. I'll go be his caddy. Okay. That's the signal, guys. Okay. That's the reality, right? Okay. So is that right? No, it's not right. It's not right that you have to live in that world. It's not. Okay. In a bear market scenario, growth stocks price low. I can tell you exactly how this will play out in a couple of scenarios. Let's go through that. Good exercise. Why not? Right? Growth stocks re-rate lower. Value stocks will outperform, except value stocks that are cheap because they have high debt, they're going to get hurt because they're not going to get refinanced by a bank or they can't access capital markets. Right? So the positioning matters. It's not just like a growth to value thing. This is complicated stuff. Okay, what about the stock? It's a value stock and they import from overseas. Is that priced in yet? Right? So cash does well. Gold, no. Safety trades are done. Safety trades are done. I wrote about this last Friday. Every safety trade has been blowing up, right? The gold miners, because risk aversion is increasing. People are pulling in due to lack of certainty. People can't forecast and make plans for the future. So what do? They just build cash and they wait and see. That's what's happening. That's not right either. It's not a good use of productive time. It's just not. It's a waste of time, a waste of energy. Right? And most of the people listening here will do the exact wrong thing at the exact wrong time, unfortunately. That's not right. You got like $10 trillion in wealth destruction. You could have just done a wealth tax, an AOC style, hard left socialist wealth tax. And you'd be better off as a country. And Chamath and these all-in guys, they, what they're saying makes no sense. Chamath never really made any sense anyway. But this is not a grandmaster plan to get the 10-year down, because to get the 10-year down, you need foreign investors to buy U.S. bonds. And we get in the dollars by U.S. to buy U.S. bonds by importing. That's the grand bargain. That's the whole idea behind the dollar reserve currency. If you are the reserve currency of the world, you're going to have trade deficits, guys. Newsflash. That's how the world works, people. 101. 101 stuff, guys. All right, so some people are starting to wake up, hopefully, connect a few dots here, but the penguin tariff, I mean, what the hell? We're talking about penguin tariffs now, right? Tariff on a country populated by penguins. It's not thoughtful. Now they're reacting. Okay, here's what's happening now. Let me show you. It's Band-Aid mode. This is a good topic. Band-Aid mode. Okay, what is Band-Aid mode? Okay, they just realized that there's companies that import from Vietnam. They heard it from Nike because Nike had a call into the White House where they could buy a seat at Mar-a-Lago. They heard from there, probably not hearing from small business right now. Okay, maybe they are, I don't know, but the squeaky wheel gets the phone call, right? Now create an exemption for Vietnam, create an exemption for this, that, or the other thing. That's a Band-Aid mode. That's called triage mode. Here's another one. The tariffs on automobiles being manufactured in Mexico and so forth. So now it's okay, let's just do a deduction if you pay for your car with an auto loan, you get a tax deduction on that. It's Band-Aid mode, Band-Aid, 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 right? That's what's happening. It's phase 2. The issue is the basic idea doesn't make any sense. Okay. It's like the patient is bleeding because of the policy. Because you got a knife held up to earnings growth. That's a key thing, earnings growth. And you try to Band-Aid all the wrong, it doesn't make any sense. That's the issue. Were there imbalances? Sure. Did Janet Yellen leave Besant with a mess? Of course. They should have refinanced longer-term debt. Of course they should have. Of course. Was this inevitable? No. That's the key thing. It's not inevitable. It's not inevitable. It's not inevitable because you had a climate that people could forecast it and make decisions against. Hiring decisions, capital investment decisions. You would be spending time with your families right now or going for a picnic. But people have to revector their focus and attention because unfortunately it matters now. It's not the highest and best use of our time as a general rule, but right now it is. That's not productive and that's not right. Okay? It's FAFO, guys. This is FAFO. There's no, I have not heard any credible economist that has talked about it. This is basic stuff. It's not like a complex idea. It's not a complex idea, guys. This is David Ricardo, like 18th century. We're talking here, guys. Very established, received wisdom. Humans have learned the hard way, right? Like you have an opposable thumb. You can shake hands. You can shake hands with someone. You can trade with them. You can barter with them, or you can pick up an axe and hurt them. That's it. If trade and services don't move across borders, and soldiers do, that's the pattern of human history, right? Most of history was that, actually. The idea of free trade is a Renaissance idea that came from Europe with David Ricardo studying farmers and crops. And it was the bedrock of the American Republic, actually. And yes, there were tariffs used to finance government because they didn't want to have income taxes. That would be a horrendous idea to them back then. Okay. But yeah, this is like I mentioned earlier, when I look across developed markets using my training and skill set, my instinct is to short many developed markets. That's not right. I don't want to do that. It's bizarre. It's not a natural human instinct. The natural human instinct is you invite your neighbor over to grill and you trade. And they've got some knowledge, you've got knowledge, and you exchange that. And you go, one fishes and one hunts. That's it. That's human history. That's the right way to do human history. That's called civil society, right? So yeah, this is it. The policies they're in contradiction, internally consistent with one another. You're trying to lower the 10-year, but you're scaring away foreign capital. Not only that, you're depriving the dollars to buy bonds by not importing. That makes no sense. It's not rational. Okay, so you say, hey, Nike, we're going to evaporate your 500,000 employees in Vietnam. You got 2 months to build a plant in the United States with advanced robotics that don't exist. Like we're talking fine-tooth stitching. Robots just now are learning how to handle eggs. Think about that. Yeah, this is what I call like the technocratic fallacy. It's all the things people make fun of McKinsey for. Smart people in McKinsey, by the way. I learned some from very bright McKinsey people, but I like making fun of McKinsey anyway, okay? So the technocratic fallacy is, hey, let's put it on a PowerPoint and we move that line from here to there. We just draw a different arrow. And what that misses is what Hayek talked about, which is the knowledge, the training, the institutions, the contracts, the relationships, the history, all of that, times hundreds of thousands of businesses, millions. That's what's happening now. That's getting upended, right? That's not right. It's not right. Makes no sense. What's the multiple appropriate to that kind of uncertainty in the world? Is it where it is now or is it lower? That's what's happening, guys. So I think you can want to buy high quality businesses. Yeah, things that free cash flow and earn value traps are interesting. But even then, like when the tide goes out, a lot of things get hurt, unfortunately. So a lot of this is tactics and timing. It's tactics and timing. Like to the half hour. So that's not right. You need to be able to make a plan and a forecast, right? I can tell you, in Silicon Valley Bank, when that thing blew up, I told you, I said, I think to the day, you can find me on Twitter. I said, okay, now's the time to buy JP Morgan. Now's the time to buy banks. The whole thing was a tempest in a teapot. Okay. August 5th, I said the same thing to the day. Said, this is nonsense. There's no recession here. Okay. But this is different. It's different because of earnings. They're going lower. Margins are going lower. Costs are going higher. Inflation goes higher. That's it. It's not rocket science. It's not a hard thing to understand, really. Most people will wait to see what that means and look for some kind of validation. Markets will move faster than that. Right? Dude, risk assets, risk off. If you're an investor, there's one answer. If you're a trader, there's a different answer, unfortunately. In a normal world, these things are aligned, actually. You buy on the dip in an upswing, in an uptrend. That's when the trader view and the investor views are aligned. That's a normal, healthy market, actually. Right now, there's a pathology. There's a pathology in the markets, right? Like, you think Buffett's buying now? No. Because people are processing this information and still having this recognition moment right now, real time. You are having the moment right now. You're learning what's happening right now, right? Everyone else, you're probably ahead of the curve, actually. Others are not. But when confidence goes, it's hard to win back confidence in markets, right? It's hard. So it's going to take time. I have a friend, he's a CFO of a newsletter publishing service. They have a lot of financial newsletters. And I was talking to him this morning. He said what they see is this, the human behavior. It takes many months for people to recover. Just they get PTSD. So what's going to happen is this. There will be great bargains. Sure, in some time frame, let's say. But most people will not participate in those. When the markets recover, then they'll get back in because people are experiencing trauma. That's what's happening, right? So it's, hey, Stein, how are you, man? Good to see you, bud. Yeah, that is a coffee machine, dude. Come on. Everyone should get an espresso machine, I think. If you have a wealth manager that doesn't do CrossFit and does not have an espresso machine, then something's wrong. Yeah, it's a PTSD, guys. This is what it is. This is what it is. I was on a podcast a few weeks ago, and I can sense the PTSD in the other guy. I can see it. You can see it, right? It's PTSD out there, right? Psychology is vulnerable. You have bull market psychology, risk on, risk appetite, animal spirits, go. It's a one-sided psychology. And after the inauguration, you had peak psychology like that. Winning, keep on winning. Now, the psychology is in the other direction, unfortunately. I wish it wasn't the case. I think twice a week I've been talking about how stupid these tariffs were. I've done my part, people. I've done my part. Yeah, it's nice. We're getting the spring here, which is good. Yeah, kids are great. Kids are great, but they're having fun. So what else? Any questions yet? This is always a good viable opportunity. Markets in turmoil. Yeah, I think it's a very dynamic situation, literally to the hour. I'm prepared to go buy. I'm also prepared at the open. There are a lot of developed market economies that are overpriced right now. I can tell you. My training as an analyst, I can tell you. My professional skill set is saying, Rom, you're supposed to short these. You're supposed to short these markets. Anyone exposed to the imports, exposed to U.S. consumer, marginal credit risks, short. That's a lot, right? Yeah, it's not a good feeling. It's not a good feeling, but people have to do what they're obligated to do. You have to be responsible to yourself and to others, right? So what do? You do what you're supposed to do. So the policy mix, think about this, how wild this is. The policy mix we're seeing is negative earnings growth and pro-inflationary. And the optimal strategy is to pull back short. That's not right. It's not right. It makes no sense, guys. It makes no sense. So if you have the training and skills, like you can do well here, but it's still, most people on Robinhood, they're like 30 years old and they don't have this experience. They're going to get clobbered. Right? Unprofitable tech, clobbered, done. I've been consistent about that. The problem is that value is also going to be rate lower. If that's one lesson from me, I think we got the growth to value rotation correct. What I didn't expect is that value would also re-rate lower. That's happening too, right? By the way, that's what a bear market is as well, right? That's a marker of a bear market. There are rotations that will happen, like to healthcare. Healthcare is an obvious opportunity. But healthcare stocks are also more expensive relative to their own history. They're not like a bargain. That's the problem. If you guys can follow the dots here, right? You're trying to find the lifeboat on the Titanic and you're like, all right, that one's higher on the Titanic. Let me go get that one. But it's still overpriced. And even in healthcare, you have policy uncertainty, volatility. What's going to happen with Medicare, Medicaid? What's going to happen with Doge? By the way, I'm all for eliminating fraud and waste. I'm all for that, actually. There's a ton of it. I went for a run Saturday morning with a guy who led like sovereign debt sales and USAID bonds. I don't even know USAID had bonds, by the way. Apparently USAID has bonds, okay? He's a Columbia graduate as well, like me. Swimmer, athlete. And there are legitimate issues to get cleaned out there, of course. But his positioning is in two-year bonds based on the Fed going to have to cut rates and real estate. He gets his beta in real estate. That's his positioning. I'm just sharing that for you all to get a perspective of how people in the real world around Wall Street are thinking. Okay? So risk off. Pretty simple, guys. Risk off. Okay, so high beta, risk off. Unfortunately, there will be a time to go get that stuff because it will rally the fastest too. But the problem is then you got to be a trader as opposed to focus on your job and your livelihood and your profession. That's not right. Everyone's fixated on what will Trump say next. That's it. That's how policy formation is happening right now. That's not right. You need clarity. You need a long-term forecast, long-term projections to build a business, build a plan to provide yourself and others and provide clarity for your community and your business. That's how the world's supposed to work. Okay. Let's see. Banking system's fine, guys. Don't worry about that. As a customer of a bank, the banks have plenty of capital. Thank you. I appreciate that. They're really cute. I'm blessed, lucky, privileged. My wife is smart and attractive, very attractive and smart. That's all I'll say, but I'm humble and happy. So look, focus on things that drive joy for you. Like, where's joy? Find joy. If you're not experiencing joy each day, wonder and gratitude, then go back to those. Find joy, wonder, and gratitude each day. Yeah, I think NVIDIA is going to get stupid cheap. I think that's right. I think it's stupid cheap now. It's 10-year lows. The tactics of the situation are overriding the fundamentals of the situation. That makes sense? Oh, yeah, this is a trader's market, not this like technicals and positioning are driving outcomes, not fundamentals. Okay. And plus, okay, what about TSMC? What are the tariffs on semiconductors? Is there a carve out? What does that look like? There's no clarity. So what happens is people just pull back. And when they see others pulling back, they accelerate their pulling back. And that's what's happening. Okay. Will there be good opportunities? Absolutely there will be. So you have to have your buy list and your sell list at the same time, ready to go. That's what you got to have. That's what you have to do in this environment. That's what you need to do. That's the best hand you can play given what you've been dealt. Okay. And the best you can do is read the reality faster than someone else and position faster. I think a lot of people just don't fully get it yet. I don't think they really get it. They're going to wait to be told by an analyst hey, your earnings growth is dropping, your margin, it's so obvious. This is very clear, guys. Like, margins will drop, earnings growth will drop. So the multiple in the S&P now is 20 times, okay? Already expensive, doable with earnings growth and a stable climate and a good CapEx story around AI. Doable, for sure. Record household balance sheets, totally doable with the path of disinflation, okay? That's the backdrop we had a month ago. Now that backdrop is a different backdrop, okay? It's inflation up, earnings growth down, margins down. And the 10-year is not going to be responsive because we're not giving countries confidence in the dollar. We're not handing them dollars through the trade. And the planning horizons are coming in. So that's called bear market. That's called bear market psychology, unfortunately. So if you ask me, like, what is Tom Lee thinking? I'm like, Tom, he's a great analyst. I want to invite him on the show sometime. I don't think I think like these guys have to project confidence. I'm just trying to be very clear and candid with you all. I think that they're looking at this, and I think others too, like it doesn't, their people are starting to understand what all this stuff means. And I go back to the basics, really basic things. You have a hand, you can shake someone's hand, you can trade with them. You have an opposable thumb, you can create tools, innovation, knowledge. You can write, or you can pick up an axe. This is going in the latter. It's like, why is my instinct to short Canada and France? I have a short position on the country of Canada and the country of France. I think that's the right thing I have to do for the people that I'm responsible to. I think that's the right thing I'm supposed to do. I don't want to do that. That's not right. It's strange. It's a weird pathology, but that's what's going to happen. So, no, Bestman's not okay with this at all. Come on. No, this is basic stuff, guys. It's not even like a contested topic. It's not a contested topic. Of course he's not okay with it. He is a thoughtful guy, but he's not an assertive personality. And I think in Trump world, it's all about relationships and personality and access, and play out the dynamics of how that room, that Oval Office plays out with Bessent, who's softer, mild-mannered, and Lutnick, who's maybe more aggressive, and is playing to an instinct that Trump has from the 80s. Edge goes to Lutnick, right? Bessent is the adult in the room. He's the only adult in the economics team, as far as I can tell. Not Steve Moran. That stuff didn't make any sense. I wrote about it when it came out like a month ago. I listened to his Forward Guidance podcast. I said, it makes no sense. It's a theory. They're testing a theory. But we have realities to deal with. Like, the biggest criticism of the left is that you take an academic theory like Marxism and says capitalism doesn't work because of this, and then you impose that on others. Or you try to tell people how you should trade and behave. And we know better. That's what this is, which makes no sense. Makes no sense. It's a bizarre inversion. It's bizarre. Is it not? That's not right. If they don't change course, Republicans will get destroyed in the midterms. If you look at, I posted this last night, there are some trading baskets. And by the way, I lean conservative and center right, just to be clear. Okay, I'm a capitalism markets guy. I believe basic things. I think DEI went too far. I was really critical of all that. So I'm probably like the marginal voter. I'm probably like that, I think. I don't know. But I can tell you that people are this is just not right. It's not right for American workers, not right for shareholders. It's not right for the people in Vietnam either. There's nothing wrong with the shared global prosperity. There's nothing wrong with shared global prosperity. Most of human history was war. War and pestilence. War. Territory mattered and bodies mattered. Now we have this like knowledge economy where value creation matters. Okay? Ideas matter. Art matters. Creativity matters. YouTube matters, right? But yeah, that's not right. I agree. I think the instinct is to own it, defend it, and then blame Biden. That's what's going to happen. That is what's happening. Why do you expect a change in course? Come on, guys. Stick to the narrative. Isn't that what's going to happen? I think that's my read as well. Markets will force a change, of course. Markets will force a change because the issue is this. If you have a negative wealth effect and consumers spend less, then the trade deficit, guess what? It blows out. It increases. And more unemployment benefits go up. So expenses go up and revenue drops. Less people paying taxes. Like I told you a story earlier. The guy importing hockey sticks from Vietnam pays $30 a hockey stick, sells for $70. He's out of business now. Okay, less revenue, more expenses, and consumer has to pay more. Makes no sense. It's a pathology. It's a self-own, and that's not right. It's not right. What's the best step to take right now? If you're asking this question now, you're in a difficult spot, I would say. I'm sorry to tell you that. I'm having this chat with you all now just to help you think about these issues at the very least. This is incredibly tactical. The next 2 days are incredibly tactical. The answer is it depends, and that's actually the correct answer. Depends on a lot of things. Depends on one, what will Trump say? That's number one. Two, what policy implication for tariffs? Is that insanity going to go away? Is FAFA going to go away? Those are two big drivers. So it's news flow. That's called headline risk. Headline risk. So you should walk around with notifications. Okay. That's the world you live in now. That's not right. That's the world you live in. Okay. I will do my best if I see it, but I have to meet my obligations first. The things we're doing here, I shared what we're short right now. I'm not sharing what we're gonna do tomorrow. I can't. How can I do that? But I'm prepared to buy, I'm prepared to sell, based on the hand that is delivered tomorrow morning. You have to have a plan, have to have plans, contingency plans, and adapt. So there will be good bargains, but if you own quality companies and they compound earnings, you'll do fine. You'll be fine. Okay. But the journey between now and then will be a little rocky, right? If you own a quality company generating earnings, they'll do okay. It's just that the valuations are too high relative to this volatile policy cocktail that's hitting markets and is being discounted in real time, literally now as we speak, the last 3 days. Right? I mentioned on Wednesday night, I said the probability of bear markets increased significantly. We're there, folks. We're there. 2 days, markets were there. Better find out sooner than later, right? Bear markets are a very different approach. It's a very, very different approach. What you'll see is rallies to moving averages, and then they'll be sold and shorted. That's probably what happens here. Unfortunately, I don't want that to happen, to be clear. I'm sharing you how I'm processing the information here. Look at every element of the GDP equation, folks. Let's go through this, okay? What we learned in school: consumption plus investment plus government plus export minus import, call it trade. Let's go through each one. Consumer, gonna get higher prices, higher inflation. That's on the cost side. How about the earnings side of the consumer? Announced layoffs from the Challenger survey have shot up. A lot of that's federal, though. A lot of that's federal, by the way. Okay. We haven't seen the private side show up yet. Okay. On investment, you got CapEx. Like, investment is CapEx. That's what that means in the GDP equation. So how do you make an investment in this environment? Where do you build your plan? Look, here's what Trump said to GM, by the way, and he got all the auto companies on the line 2 weeks ago. He said, here are the tariffs. Number one, 25%. I'm not going to move them for the rest of the 4-year term. 2, 3, you cannot raise your prices. The gross margin for automobile companies is 8%. The tariffs are 25%. What do you do? Think about that. Think about that. I'm speaking on behalf of those owners and those CEOs and shareholders because I know what they are thinking because I talked to them. I can tell you this is what they're thinking, guys. They're saying, what do I do in that scenario? What do I do? That's called paralysis. So the investment part of that equation, you're going to see pullback. People will just pull back. That's happened now. Okay. Government, that's going in the other direction. And yes, there's a lot of issues that spending needs to be reined in, cleaned up. I'm all for that, actually. But it wasn't matched and timed with tax cuts at there's an appropriate transition you need to do. Okay. So that's in the wrong direction. And trade, well, let's go in the wrong direction. Come on. So services, if I look at restaurants, have already been seeing some weakness there too. The ISM services survey came out last week showing a weakness. The question then is what's priced into markets? That's always the question. That's always the question, actually. It's not about where are we going, up or down. The question is what's priced in relative to prices. What's happened in the last 3 days since Liberation Day, you can't make this stuff up. Liberation Day is so silly. Who am I being liberated from when I bought my Nikes, or who's Nike being liberated from? These are all voluntary agreements. Who got liberated? Or was I invaded in any way? I don't see any liberation. Do you where's liberation? 401k to 201k. That's a kind of liberation. Is that liberation? The 10-year? Where's the liberation? Where's the win? Where's the win? There's no win. There's no win. Okay? Unfortunately. So, yeah, all the elements of the GDP equation went the wrong way, unfortunately. And so the last 3 days, what's happening is people are processing this information and discounting it into prices. That's what's happening. What that means is technically they're saying, oh, I own this thing. I thought it was worth this, but their margins are lower and their cash flow stream is lower. And I can't discount 10 years after that. So to bring in even the time series of that. And so they're going to mark it down. That's what's going to happen. That's what's happening now in the last 3 days. Okay. That's going to continue to happen because analysts haven't yet updated their earnings estimates based on news from 3 trading days ago. Okay, we cut a deal with Argentina. So what? Argentina is a pimp on an elephant's butt, guys. Okay? It doesn't matter. It doesn't matter. It doesn't matter. What matters is Mexico, Canada, Vietnam. Yes, for sure. China doesn't even matter to Canada. It really doesn't. I think the point is to get production from China to Vietnam or Mexico to an ally at low cost that we can rely on and trade with, because we don't want those jobs. Which American wants a manufacturing job to take steel welding, tooling? It's hazardous jobs. Or to deal with inhalation of fumes from oil. No one wants those jobs. And the story is we're going to create advanced robotics, and the story behind that, by the way, Andrew will focus on drones. So all I know is one company indexed this whole thing. They have product market fit on drones. Okay. Like Boston Dynamics is really good at making these videos. They've been doing videos for 10 years. Google sold Boston Dynamics, that video company from Boston. They sold it. Like, all right, this Boston Dynamics. Those are stories. Those are stories. It's not substantive yet. Yes, the future is coming, but it's not here now. There's no transition to that world that's credible. That's the issue. Now, if you're an operator, you would know that people know these things for operators. But if you tell an operator meaning like a person owns a small business or a company, you're telling them how to do their job. Amazon already invested in robotics. They do it automatically through capitals in the free market. Go to Amazon factory, go to Tesla's factory. Incredible innovation, automation. They have advanced robotics. The government didn't tell them to go do that. They did it themselves. It was in their own interest to do so. How do you get advanced robotics for Nike sneakers? And that's just one example of many writ large, many more examples, right? That's a visible example and a symbol we can point to make it more concrete. So it's FOFO, guys. This stuff is FOFO. I mean, it's, on the other hand, it's very clear what the consequences of these policies are. So you can, that if there's a saving grace, that's one. I'll tell you one thing I'm looking at. Okay, this is an interesting idea. There's excuse me, getting over this cough. In Canada, there are these stranded oil and gas wells, thousands of them. They're priced at $1 because the government has said you've got to shut in those wells because the natural gas that leaks into the atmosphere is destructive to the ozone layer. So I'm looking at a deal right now where it's run by a Harvard MBA guy. The MBA side of Harvard is pretty good still, right? So we'll hold that against him, right? So what he's doing is he's buying the wells for $1. And what he does is he puts a Bitcoin miner on it, powered by the natural gas. And because the natural gas is combusted, it's better for the environment. So he gets carbon credits also from the government. And then he can access the oil and then sell the oil at market rates. I like that. Cash on cash returns like 30-35% year on year realized. And I'm trying to look at how does that thing fall. 67% is from oil revenue, actually. So you're not actually betting on the price of Bitcoin. But the existence of Bitcoin unlocks the regulatory arbitrage opportunity for him, because you cannot vent natural gas destructively. It's terrible for the environment. Flaring is not permitted in Canada also. Flaring is you have a natural gas stove, you turn it on, it's not cooking something, that's called flaring. But if you combust in a Bitcoin miner, then it's productive. Therefore, you can get after the oil underneath. I like that. That's a clever idea. I will do something like that, probably. But so I didn't see this interview. Yeah. I'm just not seeing incremental. There's a lot to see and watch. But the number one thing is, what will Trump say and what's the policy in global trade? That's it. Those are things to focus on. Where to focus is that. That's it. What else? Questions here. We are poised to, we're in a strange, I started this whole thing by saying, right now you're confronted with a paradox. You have a paradox. Okay, here's the paradox. You are extremely oversold. The VIX is elevated. Put-call ratios have spiked. And your professional instinct should be to go buy, okay, on the one hand. On the other hand, you have S&P PEs at 20 times earnings, and you've got a policy cocktail that's hostile to growth, to margins, and to earnings at the same time. So from an investor perspective, you're supposed to sell. From a trader perspective, there will be an opportunity within Monday, certainly no later than Tuesday, for sure. I can see that. Unfortunately, the timing matters. If you're early, you're wrong, okay? If you're early, you're wrong on this. And that's not right. Why do you have to think about that? Why do I have to think about that? Makes no sense. It's nonsense. Okay. So I would say trough valuations of the S&P in this environment are 17 times earnings, let's say. Possibly. If these tariffs hold up, then it could be lower. It could be lower, right? The trough S&P multiple in the Q4 2018 period, which was Trump trade war 1.0, was 14 times earnings. We're 20 times now, people. Now, the difference between then and now is we have more Mag 7 weighting now than then. So it's like called the fallacy of composition. You can't compare a multiple from 2018 Q4 to now because the weightings on different securities are different. We have a higher weighting to infotech, and those are higher quality businesses. So the S&P multiple should trough at a higher price than Q4 2018, which is 14 times. Okay, so maybe that means 16 times, 17 times. But you need, until the thing that caused the issue goes away, it's hard to get clarity to inspire confidence from an investor, from a business person. That's the number one thing. So it's like, is the forest and the trees. That's what this whole thing is about, right? It's forest versus the trees. There's a fire in the forest. Like, there's a pot of gold over there. Do you run into the forest to get the gold? That's what's happening now. Or like your house is burned. Wait, okay. Let me get the kids, get the wife out. Okay. So those are the kinds of things that are happening now, right? Again, Trump can change this very quickly, very quickly. It's what he says. But we haven't seen evidence of that. We haven't seen evidence of that, right? I'm trying to just be as objective as I possibly can, right? I'm just trying to be objective as possible as I can. I'm not trying to create alarm or fear. I'm just trying to tell you how I'm seeing reality. Okay. Like, I don't think what I've told you is consensus, is what I'm saying. There's another way to put it. Okay. Like, I have people last week saying, Ram, I want to buy this and that and other thing of tech. I'm like, what are you doing? People have been trained to buy the dip for 2 years because it's been rewarded. But this is different because you have earnings growth going in reverse. The primary driver is earnings growth. Tell me the direction of earnings growth. I'll tell you the direction of employment. I'll tell you the direction of stock prices. That's my magic trick, guys. Tell me earnings growth. Okay. I also want to know inflation. I also want to know the trajectory of interest rates. Okay. Those are the critical variables. Okay. So, yeah, quality businesses make sense. Quality liquid businesses make sense. And there are some good bargains out there. I'm not saying they're not. But most of the market's overpriced relative to where they should be. That's the issue. Right? So the question is, those start repricing to where they ought to be. What happens to the things that have value? They'll hang on to their value more because they're closer to fair value. But the way beta works, the way the market factor works, is probably all get devalued. In 2008, Apple had a meaningful dividend yield, actually, at the lows. It was like a 10 times PE ratio, right? So things will overshoot on the downside. So you have to, unfortunately, be dynamic. You have to be dynamic, and you gotta, like, right now I can tell you Monday is highly likely you get a capitulation bottom. Highly likely. Okay. Is it a sustained rally though? No, I don't see that. I think it's like a coiled spring, pops, and it gets sold. Unfortunately. This doesn't make any sense. I'm sorry, my friend. I'm sorry. No. Yeah, globalization has benefited Americans extraordinarily. The United States is far wealthier than the Europeans are. The median income of an American versus the European. Europe's gone nowhere. In decades. Okay. The Americans are the beneficiary of the current dollar reserve system and the trading apparatus that was designed and led by Americans as a part of the post-World War II deal. We're like, all right, guys, look, United States, you saved us from Nazi Germany. Okay, United States, you're the big dog in town. You got to set the rules. And yes, the United States had a significant portion of global GDP, and it's lesser now. But that's because of the nature of technology and just capitalism too, right? Smaller countries that have their act together on rule of law, like Hong Kong and Singapore and South Korea and other tiger cubs, can grow quickly. And the same way you buy high growth stock, that's a small cap, can grow quickly, right? That's all that is. It's not Americans getting screwed. Come on. That's nonsense, guys. I'm sorry. That's just nonsense. Did you get screwed going to Costco and saving on your oil change or getting a $1.50 hot dog? Where were you screwed exactly? Right? So let's see, questions. I think 10 years will drop. I think this is one of the easier opportunities, actually. The 10-year is going to have to drop because the 10-year will reflect lower growth expectations for the United States economy. So the 10-year has to drop. Bonds, make bonds great again. I was on Yahoo Finance Friday, and I opened up with that. I said, make bonds great again. I'm not a big fan of bonds, by the way, but that, unfortunately, is a rational strategy right now. Okay, so yeah, it's just stupid. It's just stupid, guys. It's just stupid. It's self-inflicted. And again, a lot of this has to just psychology of Trump. There's a lot of lawfare. There's a lot of, I don't see him saying, oh, okay, let me just pivot and go. I just don't see that. I think there will be at some point that Trump put. So I studied the Q418 crisis, not a crisis really, it's a trade war 1.0. So the market bottomed. Two things happened. They happened around the same day, actually. On December 24th, Trump said, go buy stocks, stocks are cheap. That was one. And two, Powell cut the adjustment hikes. He capitulated. That was the bottom after a 19% correction in Q418, which led to a trough PE of 14 times. Again, we're 20 times now. There's a composition issue I mentioned earlier, right? So it's not apples to apples, but there you go. So yeah, he has a tremendous amount of control in this situation. Tremendous. All right. How about the middle class? Let's talk about this. So actually, I'm so glad you pointed this out. Thank you. I have a newsletter. I published it this morning and actually talk about the middle class in there. And I show what's happened in the middle class. And let's just look at the data. Okay. It's not saying that people aren't having a hard time. People are struggling. They're working two jobs. Get it. Delinquencies are going up. I can see it. Okay. But it is a K-shaped economy story. Okay. So I'm going to share my screen here. Okay. Middle class. Let's take a look at the middle class. Okay. Here you go. Percent share of U.S. households by total money, income, and constant $22, a mouthful. The high-level takeaway, is that you're at 37.5% high-income earners now, greater than ever across decades. Now, some of you are going to say, oh, inflation. They're at the $100,000 mark because of inflation. No, these are real incomes. It means after inflation. Okay? What manufacturing job do you want your son or daughter to get into? I don't see that. Healthcare makes sense. Nursing, becoming a doctor, engineering, maybe. We gotta think about engineering. That's tricky on the coding side, right? But creativity for sure. Land, real estate development. No, middle class has been growing, folks. It's been growing. It's a fact. Americans have multiple cars. That's a novel feature of the United States. Think about that. Genghis Khan used to send people on horseback to fetch ice for him, and it would melt along the way, and that was their luxury. Ice. Everyone's got a refrigerator, washer, dryer. Now we don't have help like servants like you do in countries like India or Pakistan or Indonesia. There's a lot of help because there's not a bid for that labor. In the US, there's a bid for labor because labor is productive in the United States. You mix labor with capital. Capital means knowledge, know-how, good management, tools, productivity systems, and a good home market. That creates a bid. That's the issue, actually, right? We need people to care for the elderly, care for the young. That's the issue. That's the focus. That should be the policy. How do you create people that can serve the elderly and the young and create more American babies? That solves your immigration issue, and that's a longer, complex topic. That makes sense. It's not about manufacturing. What are you talking about? Makes no sense, people. I'm sorry. Yeah, bringing pharmaceuticals and controlling the supply chains and fidelity, and that, yes, that makes sense. You have Puerto Rico, Ireland. What's wrong with Ireland? I'm sorry. What's wrong with Ireland? Makes no sense, guys. Makes no sense. That's not right. Things should make sense. It's not right that things don't make sense. So anyway, hopefully that addresses the middle income part. Yeah, unfortunately, most human history is war. Okay. The 20th century is overall, probably humanity got an F. You had two world wars, you had nukes in the first half of that. In the back half of that, you had a world oriented around trade. And that worked because you're appealing to the interests of people. And they're rewarded when they serve. They're rewarded through service by creating good products and good services in a competitive market where they're held accountable by the market. That's how it works. That's a normal world, people. So let's see. The lowest, the pain threshold. Well, this is a mind reading exercise, right? You're saying, when would Trump flinch? Like, he's going to blame the globalists and Biden. That's what he's going to do. So if that's your story, when do you flinch on that story? I guess accountability at the midterms, that's one. So they have to do something, right? Like, Elena Stefanik was supposed to be the UN ambassador. I thought would be a fantastic appointment, by the way. I thought would be a fantastic appointment. They've recalled her to keep her in her district because it's likely to be a competitive race. That was a race she won by a landslide. She won it by a landslide. I think it was like 56% versus her opponent. In politics, that's a landslide. Let's see. Any questions, folks? Yeah, look, Canadians are traveling to the United States now. Like, all these behaviors are starting to shift. Remember, the joke was Americans would go to travel in France and Italy. We have a nice, strong US dollar, buy stuff cheap, enjoy nice Italian wine in Tuscany, and get a nice French wine, right? Well, the dollar's going down now, folks. The theory was you put tariffs on the dollar going, no, it's not happening. It's not happening. It's the fatal conceit. It's a technocratic fallacy. This is why the framers of the American Republic had incredible foresight, because they said, look, absolute power corrupts absolutely. You have division of labor, division of the branches of government. Even within the branches, you have checks and balances. You got a Congress, you got a House, you got a Senate, right? You got appeal processes. The whole point of the American Republic was to limit power and push it to the edges, to decentralize power and decision making, and put it as locally as you possibly can. In fact, anyone that was in Congress, they were running businesses too. So they felt the consequences of that policy. And they were oriented around earnings growth. Earnings growth, we need a Taylor rule for the White House. The Taylor rule in the Federal Reserve is a formula that specifies the optimal interest rate based on a couple of variables. Like, a robot can run the Taylor rule, okay? You need a Taylor rule for the White House. Now, the Taylor rule is this: grow earnings. That's it. Grow inflation-adjusted earnings. That's the trick. That's the trick. That's the magic trick, people. In the late 90s, you had a Republican-controlled Congress. You had Newt Gingrich, Contract for America. You had Bill Clinton, who was a Democrat. It divided government. And you had a budget surplus. The way it was done, here's how it was done, is that Clinton took the Republican playbook and he cut different welfare programs. He cut spending. There was a big headline called "The Era of Big Government is Over." The era of big government was over. Isn't that a similar kind of climate we're talking about now? But that approach was effective. That approach was effective. That's an appropriate approach. Okay? That made sense. So you had a budget surplus. Stocks were all-time highs. Valuations were good. Yes, there was a bubble. Okay? But the current approach is it's 52 card pickup. That's what this is. 52 card pickup. There's no lack of clarity. Your clarity comes to, you have clarity if you have access. Pay to play. That's called pay to play. And that's not going to help things. Okay. So you pay to play. What culture do you create with that? What culture are you going to create? Pay to play. Makes no sense. That's banana republic stuff, right? In India, you have companies like Tata and Reliance Motors, and they're entrenched monopolies protected from competition. They've got an incestuous loop with the government. There's a lot of corruption. But you don't want a pay to play dynamic. It makes no sense. That's not right. Am I speaking out of school here, people? I'd love to know. If you think I'm wrong, let me know. I would love to hear that from you. I would love to hear that from you. I really would. Okay, I think safe haven trades are done. TLT is actually a pretty good idea, actually. Yeah, I think TLT is a pretty good idea. So, let's see, I'm just going through some questions here. Yeah, I don't know. What do you want to talk about? What's going to go down the most or what's going to go up the most? Volatility. Yeah, this guy's funny. Liberated from gains. Look, I think if you think back to 2008 September, so you had TARP. Remember TARP? It was a bank bailout program. TARP 1.0 wasn't passed. Market corrected significantly. Then TARP 2 was passed. I think '08 playbooks are in consideration. They are in consideration. But again, the neck on the boot of markets and psychology and risk is very simple. It's just this self-inflicted global trade war. That's it. It needs to stop. That's it. It needs to go away. And then you're good. That's it. Okay. Hey, hopefully it helps. I look at what they have to say regularly. In London, it doesn't make any sense. He wants to replace 500,000 workers in Vietnam with robots. So where is the American job? What does that do for Nike? What does that do for the cost of Nike? They also have to spend more money on robots that don't exist. What happens to the consumer is going to have to pay a higher price. Where's the win? Where is the win? That's not right. There's no win. There's no win. I'm sorry. There's no win, people. This is me trying to communicate reality with you right now. Is there a win? Can someone please reply to me? Hey, where is the win? I'm asking you. I don't see any comments saying about the win. I don't see a win. Where's the win? I can tell you the win is, I can tell you the wins are short France, short Canada, short other things too, unfortunately, short Costco. That is not what you're supposed to do as an American. You're supposed to trade, make peace with your neighbors, trade, do business together, do business. That's American capitalism. It worked. It worked for decades. This is a significant cell phone, guys. It's a significant cell phone. Yeah, I think NVIDIA is like pretty darn cheap actually right now. It's absurd. Again, timing and tactics matter a lot in this environment, like sanctions, all these other things. But I think, yeah, if you were buying NVIDIA 2 years from now, you're going to do well. Sure. Yeah, that statement is true, I believe. But let's see. It is a technical market. Like it's flows and it's not about, and unfortunately, on the fundamental side, there's a lot of things that are expensive. Okay. So futures haven't opened yet, but I think my next word is like net 50%, just to be clear, going into this. And think about this. Here's an interesting question. So if you're benchmarked to the S&P 500, if you're like net 90, you have significant benchmark risk. Think about that. So if you're a long-only manager who's benchmarked to the S&P, and you see this policy wrecking ball called global trade war, we haven't started the retaliation cycle yet. That's coming. Europe's got a package on the way. Stupid. Sales taxes on everyone. And we're charging sales taxes to ourselves, right? So if you're a long-only manager, what do? Think about that. That long-only manager is going to hide in things like staples and defenses, which they have. That's gotten you Costco 50 times earnings, though. That's not going to work. And that started to unravel on Friday. Been watching that very closely. People sought shelter in Berkshire Hathaway. If you buy Berkshire Hathaway stock, first off, you're buying a lot of cash and T-bills, and you're paying a big multiple for that. That doesn't make any sense. People did that, though. So if you're a long-only manager, you're in a very difficult world right now. Like my heart goes out. I don't know what you can do in that world. What's your position? What's your optimal positioning in that world? It's a really interesting question, right? Safety. You would seek safety, cash, short duration, liquid, large cap value, probably something like that. And some insurance companies. No, but the tide is powerful though. So yeah, it does have a Brexit feel to it. It's Brexit, but much, much worse than Brexit though. right? It's like, you want to make pharmaceuticals more expensive? You want to make tires more expensive? Cars, number 2 purchase. 30% of the lumber in an American home comes from Canada. And yes, Canada has trade issues. Yes, they do. You got to have more American banks in Canada. That's legit. It's totally legit. All for that. Canada's got to spend more on defense too. But this is not the right approach. It's not right. It's not the right approach. It's not right. Yep. Let's look at the digital assets market right now. Okay. So let's see. Bitcoin down 5%. Not bad. All right, hanging in there. I'm not gonna walk through the other name. I don't wanna put attention on something that's not going up at this moment right now. Okay. I don't think that helps anyone. No, this is nonsense. This is why it's nonsense. Well, first off, let me acknowledge the situation. Right? There's a boatload of debt that has to be refinanced. 1. 2, Yellen should have termed out the debt. That means issue longer term bonds at 1.5%, 2%. That was a no-brainer. It's below inflation. What are you going to do? It's literally free money in real economic terms. They didn't do that. Okay, that's legitimate. I was trying to call it a spade, people. I'm trying to, if you can parse reality, you can do pretty well. If you can just see what's right in front of your face, you can do pretty well. Okay. The problem is this. The cost of bringing the 10-year down in terms of destruction of assets and wealth is more significant than savings. Okay, the tariffs are going to generate $300 billion in revenue. They expect $600 billion. Real people expect $300 billion. But the destruction, the asset side of the American balance sheet is down like $8 trillion in 2 days, 20 trillion. It's a lot. What is this? It's like a burning down the house to cook a steak. It's a metaphor I read. That's a perfect metaphor. Perfect metaphor. Burn down the house to make a steak. Makes no sense. It's not right. It's not right. I'm a capitalist. I can tell you it's not right. I believe in free markets. I believe in free trade. I believe you trade with your neighbor. Like very basic common sense things actually work. The things you grew up in school with actually work. You have a fence, you do your focus, your area, you fish, they farm, you meet periodically at a market and you trade. And everyone's better off because I can't eat fish all day long and the corn is seasonal. The corn is seasonal. If I store it, the rats get after it. I need to trade. Right? It's lumpy, very, very lumpy stuff too. Like you want to be an exporter? You want to be the back end of the global value chain? It makes no sense. You want to be the front end, which is where the United States is right now. The global economy is built on the shoulders of the US consumer and US banks, US capital markets. We're in the front end of that chain. You don't want to be the back end of that chain. Then you're subject to commodity. Then you can get sanctioned. What are you going to sanction the United States? It's unthinkable. It's inconceivable. This idea of a global reordering makes no sense, and it's not right. It's not right for Americans. It's not right for the Vietnamese. It's not right for Canadians. It's not right for the French. Not right for anyone. It doesn't do any good. Anything. Nothing. Nothing. I'm sorry. There's nothing. I wish I could tell you the silver lining, people. I'm sorry. You see, Twitter account. I don't know. That TikTok thing is nonsense. But I think tech will rally the most coming out of this, though. Tech will rally the most, of course. It's an obvious statement, actually. It really is. But you got to position correctly within tech. Software will rally too, but it's too expensive given the current realities of the world. It's too expensive. What else? Here we are spending time trying to understand the psychology of an individual who can create confidence if they walk away from this policy. That's it. It's the number one thing to focus on. Nothing else. Nothing else. That's it. It's the one thing. There's no grandmaster plan, people. There's no grandmaster plan. You think there's a grandmaster? There's no grandmaster plan. It's backward curve fitting. It's telling a story to fit the history of what just transpired. That's what you're seeing. Okay? I'm just trying to give it to you straight and real. Okay? Let's see. Yeah, there's an interesting article I saw. It's called The Myth of Deindustrialization. I don't have a view on this, actually. I don't have a view. I'm still trying to understand this topic myself. But essentially, they make the argument that actually this whole deindustrialization American base is like it hasn't happened, or it's not as we're like a Tesla manufacturing is a good example of that. And yes, textiles have gone offshore, of course. But the point is that it's important not to get swept up in the story. Like the reality is more complicated than that, right? Look at what companies are doing and saying in their transcript. That's reality. That's what Druckenmiller does, by the way. He looks at what companies are saying. That's how he develops his top-down views. He actually informs them what the companies are saying. You're held to an audit standard on pain of fraud, right? You don't have an incentive to get reelected. You have to earn and maintain investor confidence. But I can tell you, this stuff makes no sense, guys. No sense. Yeah, if he walks it back, excuse me, all-time highs are still behind us, number one. Number two, there will be a Trump risk premium in the market. So risk premium is when you have the discount securities based on an unknown factor. That was a Trump bump before. And I wrote about that extensively last year. I think in February, March, I think I was one of the first actually to point this out. There's a legitimate Trump bump, right? I remember that election eve, I said, don't hedge, stay long, go, right? But so a risk premium is when you get a discount. You have to discount cash flows. That's the world we're going into, okay? Because of uncertainty. That's it. So that will mean lower equity valuations. Like of this, I'm 100% sure. Like the multiple will come down. That I'm sure, right? No doubt about it. It's clear as day. The market's pricing that in right now too. Yeah. Markets are built on psychology and a foundation of trust and long-term forecasts and planning and reliable and credible expectations. So if you're in the S&P 500, you import somewhere, semiconductors from Taiwan or South Korea. If you're even your Tesla, you need component parts from other countries around the world. Which company is immune to this? I'll tell you, actually, there's one category of companies that is immune to this. Insurance stocks. They've been the best performer up until this past Friday, by the way. Okay? Insurance, you're not importing anything. You're a balance sheet business. And your customers have to have insurance by law. So even if the consumer is weakening, you're going to own insurance anyway. That's worked up until Friday. So the point is, yeah, there's a re-rating lower in the multiple that we're going to experience. It'll hit growth stocks first, hard, already is. It'll keep happening. But I don't think value stocks can escape that, unfortunately. Like industrials, take a look at industrials. I don't own any industrials. Who's going to buy Caterpillar and John Deere? You think the Europeans are going to do that? You think Australia's going to do that? Nope. Canada doesn't know. So the world was priced for an infrastructure rebuild. That's not the case. Right? Yeah, let's see. Yeah, so Druck made an interesting comment. He said, look, American spending, if you take the interest payments, that we're overextended and you need to generate revenue, and tariffs are a sales tax and a consumption tax. All that's accurate. All that's right on the mark. I think his view, he didn't come out and spell it, but what I read is that if it was lower, it would be better. Lower, clear number that people can orient and plan around. That's what he's looking for, right? There's a legitimate trade, there's a legitimate deficit issue, yes. But the typical Republican and conservative approach, by the way, solve it through growth. I'm not trying to weigh in whether that's right or wrong, by the way. I'm just saying that's a typical Republican approach. It's deregulate and grow, tax cut and grow, generate revenues. This is a self-owned far left maneuver, actually. This is exactly what Alessandra Cortez, AOC, is exactly what AOC would love to do. All right? Or like Naomi Klein, who writes at The Nation. These are far left progressive. Stop trade with the rest of the world. Increase costs. So that doesn't make any sense, guys. It makes no sense. Who's ripping who off here? Who's ripping who off? We got a nice iPhone here, manufactured from components around the world in a supply chain we can't even imagine. Remember how Milton Friedman's story about the pencil? He said, no one knows how to build a pencil. The person who sells the pencil, they're not the person that manufactures it, the distributor. The person who manufactures the pencil, well, they're doing the assembly. Someone else is getting the rubber from Argentina, and another person is actually molding that, and it's exactly the right form. Then the steel comes from somewhere else, and that's processed in a certain way, etc. No one knows how to make a pencil. You're trying to change the global supply chain overnight? How's that going to happen? Makes no sense. You announce Apple is going to spend a couple $100 billion in the United States. I'm short Apple, by the way. I think they're one of the worst things in Mexico. I hate to say that, but I have to do what I have to do. And that's not right. Doesn't make any sense. So you can't rearrange a global supply chain like that overnight. They'll get an exemption. I'm sure they have to. But then what about the other companies that don't get exemptions? You need clarity, rule of law, and the ability to project and forecast, make long-term. That's what markets like. That's what markets like. So, yeah, let's see. What is the good case here? The good case is this. All right, good. It's always good to think about the bull case. Very important. Always find the opposite view. What's the opposite view? The opposite view is this. Opposite view. Right now, Besson is calling Trump, who's trying to win a golf tournament for seniors, and saying, hey, futures are indicated to open down 5%. The last time we had 3 gap downs like this, back to back to back, going into a Friday to Monday, you had a 1987 crash. That's what that conversation is going to happen. Mr. President, we need to do something. And he's going to say, well, what do you advise I do? Okay. How does that conversation play out? Okay. Besson's going to say, Mr. President, you remember we had option A, B, and C. C was the Fafo-Lutnick plan. He's not going to say that, but that's what it was. It's the Fafo-Lutnick plan, GPT-4 plan. Put tariffs on penguins. Penalize Americans that move production from China to Vietnam. They're paying more. They move production from China to Vietnam. They're paying more. Think about that. That's a lot of expense that was already paid out behind you. Okay? So he's going to say, okay, Mr. President, we have 3 choices. You remember you did option C with London? I got you this. So he's going to have an I told you so moment with the president. Okay? How he handles that is very important because you cannot trigger, you cannot say, you have to frame it very carefully. If you're a Besson, you're talking to GPT-4 and saying, how do I deliver this message to the president in a way that he can hear it the right way with this objective? That's what he's doing right now. I would be doing. If I was Besson, I would say, do that. Hopefully the president wins the game of golf. So he's in a receptive mood. Hopefully that happens too, because the communication matters, right? If Zelensky said something differently on that day in the White House, could have played out differently. It would have played out, maybe, I don't know. Maybe it wouldn't have played out differently. I don't know. It depends if JD had an objective or not. We don't know. So then Trump's instinct will be to say, okay, blame the globalists, blame Biden, issue 2 tweets. That'll happen. Okay. And he's going to say, so look, what about all the influx of trillions of dollars? And Besson's going to say, Mr. President, you're down $8 trillion in equity market in 2 days. And you're about to have another $4 trillion, and you're selling for $300 billion in revenue. Like, how do we stop it, Scott? How do we stop it? And Scott's going to have to say, stop the policy. Trump said, I can't do that. I need this. So then the answer is going to be 10% universal tariffs. That's my prediction. I don't know, something like that. I'm guessing, I'm speculating here. You have to, though. You have to speculate. You have to read someone's mind right now. That's not right. Is that right? No, it's not. Okay, but that is the conversation that's going to happen when futures open up in 1 hour from now. Let's see. Any questions, guys? Some good comments here. I'm not going to share them on screen. I don't want to offend anyone, but I probably already offended someone here. So there you go, folks. I'll try to log in later in the evening and see if there's any more to add here. But I'll close with where I began. You are confronted with a paradox right now. You have a paradox of extremely oversold conditions where volatility is high. People have bought insurance after the house burned down. And your instinct as a trader should be buy the intraday lows Monday. On the other hand, as an investor, you are confronted with a situation where market multiples are well in excess of what they need to be, given this policy cocktail that will hurt earnings. It will lower earnings. It will lower corporate profit margins. It will increase cost of goods sold. It'll lower revenue, increase expenses. Okay. That's the paradox you have been dealt with right now. This is the paradox you are facing right now. Okay? So horizons have come in. What you're going through, everyone else is going through it. At a CEO level, a business owner, everyone's going through that right now. Planning horizons are going in. People are pulling back. You can see in lower restaurant spending. Okay? And my conclusion is that you're in a bear market, unfortunately. So tactics will matter more. And I wrote a newsletter 2 weekends ago, and I started with this. And Humpty Dumpty had a great fall. Humpty Dumpty sat on the wall. Humpty Dumpty had a great fall. All the king's horses and all the king's men couldn't put Humpty Dumpty back together again. That's just the nature of psychology and how markets work, right? If you buy a pen, you're relying on millions of contracts with individuals all over the world to bring this pen to you. That's been thrown up. That's 52 card pickup. 52 card pickup just happened. Right? So investors will pull back. That's what's happening. And they're pricing in this lower earnings relative to the reality of where valuations are right now. I have no doubt that Trump's phone is ringing off the hook, but it was ringing off the hook before this, for sure. It was ringing off the hook the weekend before the Liberation Day. I have no doubt about it. Right? If you're an auto worker, let's say the Wall Street Journal wrote a piece about these automobile companies that are being told not to raise prices when they've just been dealt with the 25% sticker shock and their margin at 8%. What do you do if you're GM? You're supposed to lay off workers and cut production. Stop manufacturing. That's what you're supposed to do. That's the rational response from GM right now. Does that make sense? No, it doesn't, and that's not right. Does anyone think that's right? I love it. At the foundation of all truth is a basic moral reasoning. All right, guys, we'll check in later, all right? Be well, spend time with your family. Take care now.
Thank you for listening in on the episode. Remember, in the world of investing, the road less traveled often leads to the greatest rewards. I'm Ram Alawalia, your host and Chief Investment Officer at Lumida Wealth, where we specialize in the craft of alternative investments. Invest wisely, stay ahead of the curve, and stay non-consensus.